Tech may have taken the spotlight amid the rush to build out AI infrastructure, but the safety trade has quietly outperformed, and you can see that right here. Spider Gold ETF, GLD, up 21% this year to date versus the Spider Tech ETF, XLK, which is up about 15%. How about that? Here to make the case for both, I'm joined by Mark Smith, Senior Vice President and Portfolio Manager at Wells Fargo Advisors, and John Belton, Portfolio Manager of Growth Equities at Gabelli Funds. Mark, you have been bullish on GLD.
Why not? GLD is a safe haven, and if you look at it over the last 2 years, you're seeing that there are a number of reasons to go into it. Number one, geopolitical risk. We just saw yesterday 1 million barrels just got bombed in the Red Sea. That could be major issues for a number of different countries, and in fact could cause further conflict in the Middle East. And so GLD is a safe haven there. Number two, you've got a presidential election. Not one candidate is talking about our deficits. And that should be concerning for everyone. GLD is another reason why you would want to go into that.
Partly because both of their programs would raise the deficits.
Exactly. And in that case, GLD makes sense, too. And a lot of folks were going to Bitcoin, if you remember, like in the last 2-3 years. You're not really seeing that as much right now. But I think globally, you're seeing a huge demand for gold. And so it makes sense from that perspective as well. Another area you like, and I'll turn to you in just a moment, another area you like is utilities, a real safety play. Absolutely. I mean, listen, the elusive soft landing is yet to be seen. And so utilities, you're seeing a number. Do you think it's not coming, or do you? We've seen it right now, but we just saw a huge job revision, right? One of the largest I've ever seen in my career. And so all the numbers that I've been seeing when I was predicting that I thought that, rates wouldn't go anywhere. If you remember last time I was on, Tyler, I mean, that was based upon the numbers. The numbers are wrong. And so if you look at that, you've got to say, hey, listen, are we going to go ahead and continue this? Are the numbers going to continue to get worse because we thought they were good? Are they going to get worse than they are? And so that could be a slowdown. So maybe that's that soft landing we were predicting is wrong because we were looking at numbers that were incorrect. All right, John, let's turn to tech. Is everything okay in AI land?
Well, I mean, thanks for having me, Tyler. Yeah, I would start by saying, sorry, I have to rain on your parade and stop talking about such an exciting thing like gold and interrupt you and talk about something as boring as Nvidia's earnings.
Yeah.
But, I mean, I guess just to start there, because that is kind of the topic du jour, I would say it was more of a boring earnings report for Nvidia if such a thing exists. I think we kind of like boring. I think boring is actually healthy for this stock and for the longer term for the AI space more broadly. But Nvidia is kind of a boring standard beat and raise. I think there's still plenty to get excited about. I think given all their discussion of demand, discussion of finding new customers out there, discussion of broadening the product set, there's still plenty of runway for, I'd say, accelerated computing and AI as a subset of that to run. So yeah, I think there still is.
You own it? Would you buy more of it?
So Nvidia is one of the top positions in each of our funds, the Gabelli Growth Fund, the Global Growth Fund, and the Growth Innovators ETF. We've owned it for many years. We're long-term investors with Nvidia. I think a buy and hold approach has worked well for us. It's not something we tend to trade very actively on earnings reports. I'd say last night's earnings very validating of the investment thesis. We're happy to just hold it for the long term. Think the outlook is still over time pretty positive.
If that's sort of suspect number one not suspect, but candidate number one in AI. To your view, what are number 2, 3, and 4 where I would want to put money in artificial intelligence right now?
Probably, well, I would say if Nvidia is the top 5, is each of the first 5. After that, I think there's a lot of different ways to play it. Utilities actually being one area that is going to benefit from
all the power demand.
From all the power demand.
Interesting point.
The way we're playing it, so you have the cloud service providers who are Nvidia's largest distributors. I think
those being
Microsoft, Google, and Amazon. And I think, that's going to be the first place we see AI really tangibly show up in financials. You've also got some of these big consumer internet companies, the biggest of which, Meta and Google, where they're using AI, they're using accelerated compute infrastructure to bolster their core businesses. So that's it's not directly a play on AI, but that's an example of a business where they're harnessing this computing power and they're driving results in their core businesses. So